by companies to raise capital from existing shareholders. It involves offering shareholders the opportunity to purchase additional shares generally at a discounted price, or it's a normal price, whatever the company decides. In a right issue, existing shareholders are given subscription right, which entitles them to purchase a certain number of additional shares in proportion to their existing holding. The right issue size, type of security, price, and ratio are determined by the company. There can be a varied set of instruments that may be issued by way of right issue, fully, partly paid equity shares, warrants, or fully convertible or partly convertible debt instruments. Now, these are the all instruments which can attach with the right issue. All have their own set of modalities, their compliance, their disclosure, and their purpose. The purpose of today's webinar is to decode these various right issues options available. So today we will discuss on the key issue, how to what are the mechanisms of right issue instruments, modalities in the right issue, regulatory and legal aspects, evaluating a right issue. All these points today we will discuss in this session, and after the session we will take the question answer of everybody, but in the session we will try to clear all doubts. So friends, I extend a very hearty welcome to all the learned speakers for today's webinar. First, I welcome Manu Thomas, is Additional General Manager, Listing Operation, BSC Limited. He is more than 17 years of experience in BSC for managing listing operations. I welcome Manu. You are coming first time, but we are grateful to you, and it will be very useful that you have a vast experience of listing of various equities, including right issue. So today you can tell us the problems which normally companies, the mistakes the companies do, and when the issues are coming to you and you are advising to them to rectify. So we will definitely get benefited from your extensive experience. I welcome you, Manu. Then we have
Thank you, Bhavanji.
Thank you. We have Mr. Dhyanesh Garote, is Vice President Primary Market in Time. He has over 30 years of experience in the registry industry. He has worked in a both primary as well as secondary market, and has handled numerous corporate action like IPO, right issue, bonus issue, merger amalgamation, capital reduction, stock split, and consolidation. So today, when we are talking about the right issue, then the involvement of one registrar will help us and tell us the issues which normally investors and companies are facing and what are the precautions we should take care. So welcome, Dhanesh, for this program. Then we have Prashant Khatri. He is a corporate head, legal and company secretary in Bharat Gas Limited. He has more than 13 years of experience in providing legal and compliance support in Bharat Gas. I welcome Prashant for this program, and you have done your right issue. You can also tell us the object, what problems you have faced, and what advice you want to give to the people, those who are coming in future.
Thank you, sir.
Thank you. Welcome, Prashant. Then we have Anjali Agrawal. She is a partner, head capital market service, corporate professional, and she looks after the capital market services, including right issue. She has a vast experience handling this type of transactions. So she will tell us the new instruments, new things, and what are the problems and what are the intricacies you have to face. Then,
thank you, sir.
Yeah. Then we have Neeti Bangla, is a senior manager, capital market services, corporate professional. She is also involved and engaged with Anjali, and she has handled various issues on capital market, including right issue. So I welcome all my speakers for today's program, and we will definitely take advantage of their knowledge, wisdom, and experience. Friends, today the point is that company has to raise issue. Company has to increase capital. But what are the modes available that we are aware? You can bring out IPO, you can bring out FPO, you can bring out right issue, you can bring out preferential issue, you can bring out QIP and bonus issue. But the sometime company is also confused that what is the best instrument and how they can do this. So if you see the comparative analysis of these issues, then you will realize that all FPO, right issue, preferential, QIP and bonus issue, they are unique and they have their particular uniqueness in this. But the question is, which is the best? So if you see this comparative table, in the table you see in FPO, please show the table. So if you see this, then you will realize that FPO, we have divided into how this is, who can be the investors, pricing, lock-in, fund infusion, and shareholders approval. So in FPO, offer is for public, right issue also, it can go to existing shareholders, but offer for sale, it can go to anybody, right issue for existing shareholders. Then a preferential issue is to identified investors. QIP is also identified investor, but it's the QIP issues. And then bonus issue is for existing shareholders. So right issue and bonus issue, you can give to the existing shareholders. Then come to the pricing. FPO is free pricing. Right issue is also free pricing, but preferential issues as per ICDR. And QIP is also as per ICDR, but bonus, there's no price, so it is not applicable. Now come to the third issue, lock-in. FPO, it is yes for promoter quota. Right issue, no lock-in. Preferential issue, yes. QIP, yes. And bonus issue, no lock-in. Then go to the fund infusion. FPO fund infusion is there. Right issue also, preferential issue also, and QIP issue. But bonus issue, there's no fund infusion. Then about the shareholders approval, FPO, yes, you have to take approval from the shareholder. Right issue, no need. Preferential issue, yes. QIP issue, yes. Bonus issue, yes. You have to do this. Now, you just see this. If you see the comparative chart of this of 5 types of things where you can bring it for bringing money as well as increasing capital. These are the 5 issues. But if you want to see who is the king, then you will find the right issue is the king, because you can offer to the existing shareholder and you can get money from them. And the interesting point is it's a free pricing. If your share price is 500 rupees and you want to give it 100 rupees, you can give. So you can give the incentive also. So it contains some criteria, some characteristics of bonus also. So if you want to give benefit to the shareholders, you can give to all the shareholders along with the pricing discount also. Interestingly, it is not lock-in like bonus. All other instruments are lock-in. Fund infusion is there, no doubt, whatever money you are asking. So you can bring out money also, you can give the discount also. And there's no need of shareholder approval, you can decide immediately. So if you compare, then you will find no lock-in, free pricing, existing shareholders, fund will also come, and no shareholders approval. So this is the best instrument for this. So today we all will discuss that how this right issue, which is identifiable, is a good instrument where you can give incentive to the investors, your shareholders, as well as bring money. And the procedure is also simplified. What is the intricacies in this? So I will request Anjali and Niti, they will give presentation on right issue. And after that right issue, we have divided the program in such a manner that Dhyanesh will talk about because he's from the RTA. So he will discuss about what are the issues the investors, companies, and other things and regulator is asking, and one should take care. And then I will request Manu Thomas. He will talk about the regulatory aspects, that as a listing, when the companies are coming right issue, what general mistakes they are doing and what they should take care. And then I will request Prashant Khatri to share his point, because they have brought out the right issue. So what are their take on this, and how they can advise their experience. So over to you, Anjali. Please give your presentation and tell us about this right issue, and thus new instruments are also coming into this that you please cover, and the right entitlement and the trading also. And I will request Manu also, because right entitlement is a part of the stock exchange things, so that can come. Yeah, over to you, Anjali.
Good evening, friends. Thank you so much, sir, for giving the comparative between the modes of fundraising, that capital raising that are available to various corporates. And as told by sir, all these modes have their own pros and cons, have their own modalities, and have their own nitty-gritties involved. And each sort of promoter and each sort of company may be having different types of considerations while deciding as to come out with a public issue or a rights issue or a FP or preferential allotment. So over to you, Neeti, to set the ball rolling, and then I'll be taking up the points which as a management or which the company looks into while deciding upon as to how to come out with a rights issue, and what all instruments can be availed, can be taken, can be issued by the company when we decide about the rights issue. Over to you, Neeti.
Thank you so much, ma'am. Thank you so much, sir, for giving us the brief of the topic rights issue and comparative of various modes available for raising capital. So firstly, we have chosen this topic rights issue because in the recent times, we have seen increasing number of rights issue. Last year, there were around, in financial year 21-22, there were around 31 rights issue, and the previous financial year ending March 23, it has been increased to 51. So we have seen this increase because even companies are also getting benefit of this rights issue, and SEBI is also promoting the rights issue. Since 2020, we have seen regulations. SEBI has relaxed provisions relating to rights issue, and major changes are with regard to minimum subscription. Minimum subscription has been done away with. Which has earlier rights issue were not able to float because of this requirement. Now, since there is no minimum subscription, even these small companies are coming out with rights issue. That is why we have seen this increase from 31 to 51. Also, the timeline for rights issue have been decreased. Earlier, the requirement for opening of rights issue was 15 days, for minimum 15 days to 30 days. It has been reduced minimum period of 7 days and maximum for 30 days because of price chances of impact on price to give price benefit to the shareholders. This has become lucrative to investors as well as to the company. Also, this strategy of rights issue is also anti-dilutive and equitable, gives equitable rights to the shareholders. Just a second, my PPT is not. Yeah.
Yes, okay.
Yes. So in this table, you can see in the year 2022, there were 31 rights issue, and in the year 23, it has been increased to 57. And total fund mobilized, although have decreased. So why this decreased? Maybe because more and more companies are coming out with rights issue. As in the comparative shown by Pawan sir, since there is no lock-in requirement in rights issue, it is freely priceable, plus it is at a discount. It has been offered at a discount to shareholders. And thus more and more companies are finding this option lucrative and coming out with rights issue as an alternative for other modes of raising capital. Also, this rights issue, and another question which comes into the mind of the company is that at how much discount it has to be there. So basic funda to determine the rights issue is at generally discount, because it has to be given offer to the existing shareholders. If company wants to raise fund from existing shareholders, they might have to give them at discount to increase their participation. But there is no quantum mentioned in ICDR that how much of discount is to be given. It is just a market practice, and it depends on the company's financials and how much they want to give. We have seen the deep discount rights issue as well. PTC Industries, in this we handled this rights issue. 99% discount was given, and as lower as 2% discount being given by the companies, and all these issues were fully subscribed. So this was one of the point. Now, key objectives to come out with the rights issue. Firstly is fundraising for a capital expansion, diversification. If a company has capital expenditure plans, a company has to meet any working capital requirements, they have any outstanding loans to convert. Sometimes promoters have their unsecured loans outstanding. Then company can come out with rights issue as well to convert those outstanding loan as well. And to reward existing shareholder is already a method, and to consolidate the holdings. All these are the key objectives for which the company come out with rights issue. Next, coming out with framework of rights issue. Talking about legal framework, the governing provision is Section 62 of Companies Act, which is the mother section, which provides for offering of shares to the existing shareholders of the company and renunciation thereof. Next is Chapter 3 of ICDR regulation, which specifically applies to listed companies. Along with ICDR regulation, compliances under insider trading and takeover code has to be taken care of by the listed companies. And fourth, very crucial point is FEMA provisions. Since in a listed company, we have seen various category of investors, and specifically foreign investors, foreign portfolio investors, overseas body corporates, non-resident shareholders. So to deal with that, all those category of shareholders, we have to comply with FEMA provisions. Moving forward to issue size and eligibility criteria, as per ICDR regulation, rights issue are of basically the issue having issue size of up to 50 crore. For rights issue of up to 50 crore, provisions of ICDR are not applicable. Although the company has to prepare the letter of offer as per this ICDR regulations, and all the in principle approval from stock exchanges and everyone has to be taken care of, and other provisions will be governed by the Companies Act. For issue size more than 50 crore, Chapter 3 of ICDR shall be applicable. Next is fast track rights issues. Fast track rights issue are basically for a well-governed companies. In this, there is less scrutiny by the SEBI. There is no requirement to file draft letter of offer with SEBI. Company can, if there are eligibility criteria, which we will be discussing, if the company meet out those criteria, then there is no requirement for filing, getting the draft letter of offer approved by SEBI. Company can simply file the letter of offer with stock exchanges, seek their in principle approval, and start the issue process. Next, discussing about the eligibility. There is not much restriction on the issuers, promoters, and directors if we talk about rights issue. So basic eligibility criteria is only mentioned in ICDR. Firstly, issuer, promoter, and director should not be debarred from accessing the capital market. Also, they should not be connected with any entity debarred from accessing the capital market. Also, promoter and director should not be fugitive economic offender. Also, there are no partly paid up shares in the company. So if there are any outstanding partly paid up shares, the company has to make them fully paid up and then come out with rights issue. The basic motive behind is that the equal right should be given to those partly paid up shares, since calls is being made at the option of the company. So SEBI does not want that company does not make any call on those shares and does not give right to those partly paid up shares. So to give equitable rights to all shareholders, first, all the partly paid up shares has to be made fully paid up, then company can come out with rights issue. Also, one more eligibility, not a eligibility, basically that if the promoter or director are willful defaulters, then the company can come out with rights issue, but disclosure in the letter of offer, in the front page of the letter of offer, it is mentioned that from this or that promoter is a willful defaulter. This disclosure has to be particularly given in letter of offer. Also, willful, when promoter or director is a willful defaulter, then company, the promoters of that company cannot renounce their rights entitlement. However, they can be renounced within the promoter category. This was the general availability, eligibility. Then we talked about fast track rights issues. Since these are the key criteria which the company has to fulfill to qualify for fast track rights issue, and in which there is company can straight away go to shareholders and raise money. Firstly, the company has to be listed for at least 3 years. 100% promoter shareholding is in demat form. The basic criteria is the one of the major criteria, and which many companies fails to fulfill, is that the average market capital of public shareholding, not of overall market cap. It talks about public shareholding. It should be minimum 250 crore. Annualized trading turnover of 6 months should be at least 2% of listed share capital. Annualized delivery-based turnover should be at least 10%. Why this criteria of delivery-based turnover? Because SEBI wants that their shareholders should stay in that company. There should not be a company in which there are more arbitrage activities. So they want a company in which there is certain level of delivery-based turnover as well. That is 10% of annualized turnover. So to check that company is stable. Compliance with LODR, listing obligation requirements for last 3 years. So company has to be fully compliant. Although there are certain cases in which there can be minor lapses of LODR listing obligation, listing regulations, then company may approach SEBI and SEBI may grant exemption on
Neeti, we can't hear you. We lost your voice.
Neeti, you have to unmute yourself. Neeti.
Neeti का unmute हो गया है.
हाँ तो अंजलि आपके you take up.
Okay, I'll take up. Okay, okay. No, again she is muted. Anyways, see, with regard to the fast track issue conditions, as pointed out started by Neeti, all these companies we can very well understand are good companies. SEBI wants that any company which is a well-compliant company, which has a particular level of trading, the company can come out with a fast track issue wherein it is not required to go to SEBI for their approval, and they can straight away, by following a shorter method, can approach the exchanges, get their letter of offers approved, and raise the money by way of rights issues. So these are the conditions which a company which is wanting to come out with a fast track issue is needed, the conditions that it has to comply with. Next. Neeti, is your system okay now?
Yes, ma'am.
Yeah,
Am I audible?
Yeah.
Now, after is eligible for rights issue, now they has to decide which kind of instrument they have to come out with, whether to issue fully paid up equity shares, whether to come out with partly paid up equity shares, warrants, or convertible debt instrument. Each of the instrument has its own pros and cons. Also, it is based upon the company's strategy as well, that which type of instrument is more suitable to them. In the next slide, we will be discussing key differentiators of each of the instrument. Firstly, fully paid up equity shares. This is, we all have been aware of this kind of instrument. We suggest companies to come out with equity shares when 100% of the consideration is required for the object for which the fundraising activity is done, because 100% consideration is payable upfront in this. Also, in the full rights issue of fully paid up equity shares, it is a faster process, less hassles are there, less investor complaints, because it is a much familiar security, easy exit to investors. Immediately on closure, within next 10 days, the securities equity shares get listed, and it gives easy exit to investors. No separate ISIN is required. So this is a well accepted mode of rights issue. Then is partly paid up equity shares. This type of instrument is also gaining popularity from 2019 onwards, and we have seen many companies coming out with partly paid up equity shares. The main benefit of partly paid up equity shares is that company can judge that when it is in the need of funds, fundraising can be divided in up to a period of 12 months. Since in a partly paid up equity share, the company can make, whenever the company is in need of funds, they can make the call on the shareholders to pay the balance amount. Also, it is lucrative to shareholders as well, since there is no immediate fund outflow, and these partly paid up equity shares are listed also. So shareholders can take easy exit only on paying upfront 25% of the funds. And third benefit is it gives to shareholders is that dividend is payable proportionately. So all these, because of all these points, this partly paid up instrument is gaining popularity. Next is compulsory convertible debentures. This mode is not much familiar, is not much popular, though it is permissible. In this, 100% fund infusion is there upfront. Also, whenever it helps the companies in, suppose if any investor is already at, suppose 26% of shareholding, and they want to convert as per open offer, investor can acquire, creeping acquisition of up to 5% is permissible in any financial year. So investors can divide their, can take position as in more than, since these convertible debentures are convertible in up to 18 months. So they can take the position over, increase their holding in more than 2 financial years. So this is also a type of strategy which is also available. Also, one of the benefit is that these convertible debentures are separately listed and traded. So share price of equity shares remains unaffected. And ultimately, it is convertible into equity shares. So shareholders get double benefit. CCTs are tradable, and they will be ultimately converted into equity shares. Next is detachable warrants. We have done this. We have come out. This is also not a very popular security, but we have done this unique rights issue of Share India Securities Limited, in which we have come out with rights issue of equity shares along with detachable warrants. As per ICDR regulations, warrants has to be come out with any other specified securities. They can be exclusively issued, so they have to be issued as a detachable instrument with equity shares. So key features of this detachable warrant is that only 25% amount is payable, balance is payable in 18 months. In this, the option is at the end of the warrant holder. In the partly paid up equity shares, the option is was at the end of the company to make calls. In the detachable warrants, the option is available at the end of warrant holder. Whenever the funds are available with the investors, they can apply for conversion. Also, there is flexible. Also, the warrants major benefit is that the warrants are tradable. Only on paying up 25% money, these warrants get tradable, and then the shareholders can take the exit if required. But the major thing to be noted in that, foreign resident cannot participate under detachable cannot invest in detachable warrants. So these were the key features of detachable warrants. Discussing about the this unique case we handled, we would like to just update about apprise you about this issue. we have recently come out with, we acted as a merchant banker for rights issue of Share India Securities Limited, in which they have issued for every 50 equity shares, they have issued one rights equity share along with 17 detachable warrants. Both equity shares and warrants were issued, was having the issue price of 700, and it was offered as a combo bundle security. The bundle comprised of one equity share and 17 warrants, and 100% of equity share was payable, and 25% of for 17 warrants is payable. This whole bundle, the total application price amounted to rupees 3675. So this was the whole bundle considered as one application, which the investor has.
We can skip these nitty-gritties. The
Okay, ma'am.
basic, yeah.
So the basic point was telling is that although this security was unique, but it was well perceived by the investors, and the issue got subscribed by 1.3 times, and the face value of warrants was 1700. Paid up value was 175 per warrant, and issue opened at rupees 490, and current market price is 830. So the value it created in the hands of investors is almost 3 times of the paid up value. So this was the one of the unique assignment which we handled. Now, moving on to the regulatory framework for foreign shareholders. Implications under FEMA. So major question comes in the mind is that, mind of the issuers is that whether we can offer the shareholder, whether we can make rights of offer of rights equity shares to non-resident shareholders. The answer is yes, we can offer the rights shares to non-resident as well. For that, we have to comply with certain conditions of FEMA, that pricing has to be done as per ICDR regulations. It is under the approval route of FEMA. Also, but non-resident residing in the neighboring countries, in neighboring countries of India, are not allowed to participate in rights issue. Next question is renunciation, whether the rights entitlement can be renounced from resident to non-resident shareholders. Yes, it is allowed. RBI approval is not required in this case. Next is, what are the mode of payment? How these non-resident shareholders can subscribe to the rights issue? So SEBI has in its circular, ASBA has been made, ASBA mechanism has been made mandatory for subscribing to rights issue, but there are certain problems which are being faced by foreign shareholders while making the payment. Sometimes what happens is that the foreign shareholder does not have an Indian custodian. Also, the SCSBs through which they are making the application are not registered. So in that case, ASBA will not be possible, because in ASBA there is blocking of funds in the Indian bank account only. So in one of the case which we have handled, we have advised the client to approach SEBI and to tell their genuine concern that they are unable to participate in the rights issue. And in that case, SEBI allowed the investor to directly make the payment in the company's account. So in case of any such problem to foreign shareholders, that they can approach SEBI, and SEBI on case-to-case basis grant the exemption. Next is when non-resident shareholders belong to United States or any other jurisdiction in which the offer is restricted as per their local laws. So we specifically mentioned in the letter of offer that we are not making offer of right shares to those citizens residing in restricted jurisdiction as per their local laws. Specifically, US citizen, United States specifically restricts issuance of any shares. So we specifically mentioned this point, and the onus is on the investors to at the time when they apply, onus is on them that they comply as per the laws of their local limits. Further, under FEMA, we talked about instruments, rights, equity shares, partly paid up equity shares, debentures can be issued to foreign shareholders. However, this person resident outside India cannot make investment in share warrants under rights issue. It is a complete prohibition, and all those applications has to be rejected. If RBI allows any specific approval, then investor can approach RBI and take approval, then only company can make allotment of right shares to them. All this was about the regulatory framework for rights issue. Now, about planning a rights issue, which will be taken forward by Anjali ma'am. Handing over to you, ma'am.
Thank you, Neeti. Thank you for taking up the legal aspects in a rights issue. But when we talk to the managements, when we talk to the promoters, they legal is a different aspect, but they want to look into as to on what basis should they decide about the issue. So we have divided this portion into pre-issue, during the issue, and post-issue considerations, which as the company, which as the management, they have to look into. So first of all, the first question that arises in anybody's mind, in any management's mind, is what should be the size of the issue? So we generally discuss about what exactly is the present paid up capital of the company, what is the adequacy of the present capital of the company. On that basis, the second question that is of prime importance is what is their requirement, as to for what purpose do they want the money. If they want the money immediately, say to pay off any of the bank loans, then the partly paid up equity shares would not help, then warrants issue would not help, then it is only the fully paid up equity shares which would suffice their requirement. But in case it is to say buy any asset wherein upfront payment is to be made only a particular amount, and then balance to be paid over a period of time, then of course one can think of a warrant issue or a partly paid up issue, which gives me a lot of relaxation or flexibility as to when I want the money. Then my existing promoter public ratio is of very, very high importance while deciding the size of the issue. If, for example, in a situation wherein promoter holding is 24%, and by way of a rights issue, we know that we may breach the 25% threshold as mandated under the takeover regulations, we may advise a different strategy altogether, then impact on the key ratios. There was a recent case wherein the existing paid up capital of the company was only 4 crore, and they wanted to come out with a rights issue and in the ratio of 1:4, wherein for every 1 share, 4 shares to be issued. So we discussed with them and we told them that by virtue of 1:4, your capital would increase by 4 times. So you have to see whether you will be able to serve that much of capital or not, because your profits by and large would remain the same. So they understood and they accordingly tweaked their ratio. And then depending upon all these aspects, the type of instrument is decided whether to come out with fully paid up equity, partly paid up equity, warrants, debentures, partly optionally convertible debt instruments. Accordingly, all these this matrix determines the type of issue that the company should come up with. Next, yeah. Then the most important aspect which managements generally discuss with us: can we raise money for purpose of payment of loan? मुझे project finance करना है, can we come out with a rights issue? So regulators, the lawmaker has determined some of the objects which are permissible by way of a rights issue. It can be prepayment of loan, it can be investment in a JV or a subsidiary, it can be granting of loans, it can be long-term working capital requirement, land acquisition, project finance. But for each of these objects, a specific set of information to be given in the letter of offer has been mandated, which if I want to repay a loan and I do not want to share the details of the lender, that is not permissible. You have to share the details of the lender, and accordingly a complete set of information is needed to be shared. Once we have decided upon the objects, one important thing to be kept in mind is 75% of the fund raised is needed to be utilized towards the specific purpose, and only 25% can be used for the general corporate purposes, because many of the companies in the past used to mention the object as general corporate purposes, but now it has been limited to only 25%. Next. These are some of the companies which have come out with their rights issue with varied objects. I'm not getting into the further details. Now, price determination. My running market price is 500 rupees. At what price should I come out with a rights issue? It should not be that the shareholders or public should feel that I don't have confidence in my company. I'm coming out with a rights issue at 200 rupees. There might be a feeling in the minds of the public. A promoter does not have confidence in the company and it is coming out with a public rights issue at only 200 rupee. Or what if I come out with a rights issue at 490 rupees? Public may feel that इससे तो मैं market से purchase कर लूंगा, why do I have to subscribe in the rights issue? So this again is a very, very intricate topic which is needed to be looked into. The price has to be determined in consultation with the lead manager, first of all, merchant banker. Generally, the rights issues come at discounts from the running market price. As Neeti mentioned in her opening slides, that there is no fixed parameter as to how much discount should be there. There have been cases from 99% discount to even 2% discount. So it totally depends upon the company to company and how much funds do they need. Can it be higher than the running market price? This again is asked many a times. This generally happens in case of those companies wherein the market price is low, on a lower side, but the companies know that their intrinsic value is much higher. But as per our experience, we feel that public will not be subscribing to any case wherein the issue price is higher than the running market price, because then public would feel that let me buy it from the market instead of subscribing in the rights issue. Then under the takeover regulations, to claim the takeover exemption, there is one particular requirement that the rights issue price should be lower than the ex-rights price. Then only the takeover exemption, I'll be taking up in the coming slides which exemption I'm talking about, then that takeover exemption would be available. So this is one of the important aspects, that it cannot be more than the ex-rights price. Again, approvals. कौन सी approvals चाहिए? Managements do get confused, do ask us. So when we talk about regulatory approvals, we have to obtain stock exchanges in principal approval. If it's a normal rights issue or a non-fast track rights issue, we have to obtain a SEBI approval as well for the draft letter of offer. Basis of allotment is needed to be approved by the stock exchanges. We have to obtain listing and trading approvals. In case we are not meeting any of the requirements, then we may have to apply for a SEBI exemption, which may be granted by the regulator on a case-to-case basis. And some of the internal approvals which are required are, we have to decide upon the issue size, we have to decide upon the issue price, then entitlement ratio, objects of the issues to be decided, type of security, record date. We have to obtain consent from the lenders, and then the allotment. This is a brief flowchart of the entire process. I'll be covering only the important aspects. We have to, first of all, take a board approval. We have to, in case of a normal rights issue, we have to file the letter of offer with SEBI for their comments. Then upon determination of the price, we have to obtain stock exchanges and principal approval. Then we have to open the issue. Issue is to be open for a period of minimum 7 days. It can be increased up to 30 days. And then upon the allotment, the listing and trading approvals. This entire process in a fast track issue gets completed by and large within a period of 3 months. Otherwise, if it's not a fast track issue, it may take around 4 months or so. Some of the important intermediaries or agencies needed to be appointed in a rights issue. Lead manager, that is a merchant banker. Self-certified syndicate banks are needed to be appointed. Bankers to the issue are needed to be appointed. Registrar has to be there. Compliance officer has to be there. Printers, advertising agencies, Underwriting is not mandatory in case of a rights issue, and a monitoring agency is needed to be appointed in case the issue size is more than 100 crores. Only a credit rating agency, SEBI registered credit rating agency, can be a monitoring agency. So this again is an important thing. And accordingly, some of the important agreements which are needed to be drafted between the company and the merchant banker and the intermediaries can be issue agreement, escrow agreement, share escrow agreement, registrar agreement, and monitoring agency agreement. So the entire rights issue process is a combination of the efforts to be undertaken by all these agencies, all these intermediaries, and then only a rights issue can be successful. Very, very pertinent question which is asked to us every time: can the promoters oversubscribe? Can the promoters take the shares beyond their entitlement? So promoters they take their shares up till their entitlement, and they can apply for additional shares as well. However, to be able to apply for additional shares, there are 2-3 conditions. The acquirer should not have renounced his entitlement. This is one of the basic conditions the promoters have to meet. Then, as I said, the rights issue price should be less than the X rights price. X rights price is calculated as per a formula wherein the present paid up capital of the company and the capital post the rights issue are considered. Then the X rights price is computed. And if these 2 conditions are met with, any acquisition beyond 5% in a financial year, that is creeping acquisition limits, they are permissible. So meaning thereby, if my promoter holding is presently say 55%, and by virtue of the rights issue acquisition, it increases up to 65%, there is no triggering, although there is an increase of 10%, but there is no triggering of open offer in the hands of the promoters. But if this limit for any individual or collectively exceeds the 25% threshold, meaning that is, I am at 24%, and post this rights acquisition, my holding becomes 26%. There is no type of exemption available. There will be an open offer triggering in the hands of the such acquirer. However, in a recent case, SEBI has granted an exemption wherein even this 25% acquisition has been relaxed. So on a case-to-case basis, one can think of going to SEBI and making an exemption, but that again is a very, very situational thing wherein SEBI will look into all the details and then only would grant the exemption. However, one thing to be kept in mind is that the public shareholding of 25% has to be maintained at all times. Next. Now the letter of offer. Letter of offer is needed to be prepared as per Schedule 6. It has to be prepared in every case, whether it's a rights issue of less than 50 crores, more than 50 crores, fast track issue. But for the purpose of ease of the companies, the same has been divided into 2 parts. Part B is little rationalized, wherein not a detailed disclosure is required, but B1 is a very, very extensive requirement, which is almost equivalent to an IPO document. B is applicable in case the company is in compliance of all the requirements of LODR for last 1 year, and these compliances should be available on the website of the company. But in case there has been a change in management during last 3 years, or the company has been listed recently pursuant to a scheme of arrangement during last 3 years, the company will have to prepare the letter of offer as per B1. Apart from the requirements which are applicable in every case, B1 requires restated financial statements, capitalization statements, and stock market data. These are some of the differentiating points which are there in a letter of offer to be prepared and as per B1. Now, minimum subscription. Up till two years back, the minimum subscription was applicable in every rights issue. However, now the minimum subscription clause has been done away with. except in cases wherein the object of the issue is a capital expenditure. In that scenario, 90% of the issue size has to be received. And as I mentioned earlier, 75% of the funds have to be utilized towards a specific object, and 25% only can be utilized towards GCP. Now, this was all pre-rights issue discussions. Now, when we talk about during the issue, even then, the company and the promoters have to be ultra cautious. Now, rights entitlement ke liye there is a separate ISIN which is needed to be taken from the depositories and which is credited to the shareholders' demat accounts before the issue opening. Shareholders have the option to renounce their entitlement on market as well as off market. The transferees of the rights entitlement, that is, if I've purchased any entitlement from the market, I can apply for shares. I can even apply for additional shares. Then trading in rights entitlement gets closed 3 working days prior to the issue closing date. In case for any reason the rights issue period is extended beyond 7 days, accordingly the RE trading also will get extended to the same period. Further issuances during the offer period, there is a strict no on any further issues during the rights issue process. No preferential allotment or a QIP or a bonus issue can be made except by way of ESOP allotment. Now, renunciation of the rights entitlement by the promoters. So in case of a normal rights issue, it can be renounced in favor of other promoters, plus it can be renounced to outsiders as well. But in case of a fast track issue, it can be renounced only within the promoter group, not to outsiders. So we as merchant bankers, the company has to give undertakings that the promoters will not be renouncing. In case of fast track rights issue, we give this undertaking that they will not be renouncing to anybody else except within the promoter group. Now, reporting of transactions by the persons belonging to promoter or promoter group, all transactions have to be disclosed to the stock exchanges till the time of the closure of the issue within a period of 24 hours of the transaction. The reason behind this is because we show a particular pre-holding of all the promoters and promoter group in the letter of offer. So if there is any change, whether it's addition or deletion, the same is needed to be disclosed to the market at large. Investors' interest is supreme, that is needed to be taken care of. Interest of Indian shareholders, interest of foreign shareholders, shareholders holding shares in physical form. And now there is a requirement of uploading the FAQs as well on the site of the company, on the site of the merchant banker, on the site of the RTA with regard to the rights issue process. What if any portion remains unsubscribed? Unsubscription, why does unsubscription arise? If there are any physical shareholders in the company who may not be in a position to subscribe, there may be any non-traceable shareholders in the company, they may not be able to subscribe, then can the promoters subscribe to the unsubscribed portion? Yes, they can. And the board has the authority to give it to anybody whomsoever they deem fit. But having said that, these people should have applied. Unless they will apply, they'll not be, it's not that I'm left with 1 lakh shares, I'll give it to XYZ. XYZ should have applied. He should have taken certain renouncement from the REs, and then only they can be given these unsubscribed portion. Next. Insider trading regulations. We being the compliance officers of the listed entities know that SEBI is very, very particular about it. But in case of rights issues, certain exemptions have been provided that, for instance, it is exempt from the trading window restrictions. It is exempt, rights issue is exempt from the contra restrictions that are there. But once the promoters or insiders have subscribed to the rights issue, they cannot sell it within the next 6 months. Then it would be considered a contra. Pre-wala transactions are exempted. Post transactions are not exempted. We have to keep in mind. So we always say that rights issue is a twin-win strategy, both from the shareholders' perspective as well as from the management perspective. From the shareholders' perspective, it gives equal right to all the shareholders to participate, no preferential treatment to anybody. Then pricing is attractive, disclosures are there, trading rights entitlement trading is there, varied instruments can be there, and management, there is no dilution in the promoter's stake, but generally the promoter's stakes remains the same or it may even increase. Takeover regulations are exempted, free pricing, no lock-in on the shares, hybrid securities can also be issued. So we always call it a twin-win strategy. So that's the basic crux of the entire presentation given by me on ET. So that's it.
Thank you. Thank you very much, Anjali,
Thank you.
for giving a lucid and detailed presentation covering all the aspects of right renunciation, promoters, FEMA, the NRI shareholders, and everything which is coming, which is related to right issue. This presentation, we'll send it to all the participants so they can take advantage of this. So now, when you are coming out with, you have heard a merchant banker's point of view and what are the legal aspects. But when this issue is coming of right issue, then what is the status of the RTA and how the RTA is facing all these things and what is their take on and what they are their advice to the people and what are their. So I'll request Dhyanesh to please tell us from RTA
Sure.
perspectives.
Yeah. Hi, good evening all, and thanks for joining. Am I audible?
Yes, you are audible.
Yeah, thank you so much. And special thank to CP team, corporate professional team, for arranging this. Now, as you see, as you have seen in earlier slides, there are a number of issues right issue that has happened in last couple of years. And almost after handling 50 right issue during this period by LinkedIn time, we have come up with some very practical problems that issuer may be faced from the operation point of view as well as from the investor savings point of view. Now, these may not be explicitly covered in the ICDR or LOF, but altogether, these are very important points, and we thought it will be most prudent at this point of time to mention those and register in all of us mind. So whenever we are handling this kind of transaction, we should take care of this. So can I have my first slide, please? Yeah. So as we have seen, as per the latest ICDR guidelines, for the physical shareholder, we will not able to they will not able to participate in the right issue unless and until their right entitlement, what we call the RE, are there in their demat account. So as of record date, if any physical shareholder is there, their right entitlement we transfer to escrow account. So we directly communicate to them, we inform them this is what has happened, but that is as far as the immediately after the record date when we send the intimation to all the shareholder, including the physical shareholder. But our humble submission and humble request would be to all the issuers and people are involved. Please intimate this physical shareholder well in advance, say ideally 30 days prior to the record date. I know there could be certain compliances issue as far as disclosing some information about the right issue in advance, but there are means your legal advisor will definitely advise you how to communicate to the shareholder. So they are well aware in advance if they wanted to participate in the right issue, what are the precautions they should take and what are the necessary steps they should take. So they should not lose on their right entitlement part. So that was point number one. Again, now moving on, as we know, apart from physical shareholder, there are certain disputed cases are there. There are some dormant accounts are there. Some of the folios gone into IPF. Now, all those things may be later on lead into the problem, and people will claim some compensation from us. So it's most advisable to clean up all such cases go through your register of members, find out if any such open cases are there, and try to close it. And if at all, see, there is a provision where you can have certain part of the issue size in abeyance, and we can utilize that. But for that, of course, we will have to have a necessary supporting ready, and if required, that has to also disclose in the letter of offer. Now, this particular point of promoter subscription has been covered in the earlier slides, but as more on the practical point of view, if all the promoter has to participate and has to subscribe to their right entitlement part, so they should be in a position to do that. There could be, say, 15, 20 individual promoters, and company secretary or compliance officer may not be in touch with them on day-to-day basis. But we have faced this problem, or our client has faced this problem earlier, where there was only a single shareholder as a promoter, and he has expired. So when the right issue has announced, that particular folio was not in a position to participate in the right issue. So there was a big problem, and then company has to approach the SEBI and take the necessary permission and do all such things. So to avoid that, it is very necessary to see whatever the promoter's holdings are there, once you are planning on the right issue, are in a position to apply for their right entitlement part. US-based individual shareholder, that point was also covered earlier, but we will again emphasize on the same point. If any particular permission, if any approval is required from RBI, we have to definitely do it well in advance. Then whenever we are ready with the right issue, the first process, as far as from the interface of register, what happens is the applying for the right entitlement. Now, as you have seen in earlier slide also, apart from right entitlement, if it is not a normal equity, then you have to apply for the additional ISIN, which may be a partly paid up, or which may be a warrant conversion, or it could be a CCD also. So along with the RE ISIN, you will have to apply for this type of ISINs also, if it is not a regular equity. Then moving on, this is a very much practical issue which we have also faced. I'm sure some of the corporate also might have faced. If we are doing any corporate action with NSDL, CDSL, the first thing what they check if there is any outstanding payments are there. So if it is outstanding payments are there, then again we have to give the explanation, we have to make the payment, and last minute a lot of hassles happen. So to avoid that, whenever you are having any corporate action which is going to come, so make it sure there are no outstanding as far as NSDL, CDSLs are concerned. At the same time, as you know, in a right issue, along with the corporate action fees, you also have to make a stamp duty payment. Now, there are separate bank accounts linked to your issuer ID. Each corporate has different issuer ID in NSDL and CDSL, and your corporate action payment goes on a separate issuer ID, and your stamp duty payment also goes in a separate account, which is linked to your issuer ID. So make it sure you have that thing in place, you are aware. And most advisable would be just say immediately after the closure of the issue or during the issue also, make a say 1 rupee stamp duty payment or corporate action payment to make it sure your system is in place whenever there is an opportunity to make the final stamp duty payment or the corporate action payment. Now we have seen there are escrow agreement, there are register agreement, and the bankers to the issue agreement also. So in that, currently, because there are no physical checks and everything is involved, so there did not be any escrow accounts to be open. But what is required is an allotment account, because we know all these, once the issue is closed and basis is approved, so funds from the different SCSB, there are around 60 SCSB, that fund will be get moved to your allotment account to the for the allotment portion. Now, we are already talked about monetary agency account. If it is required, the issue size is more than 100 crore, definitely monetary agency account. Now, when we talk about refund account, it is only and only for enabling purpose, because all the payment in right issue now we receiving through ASBA. So there is no refund involved. It's only the transferring of the fund of the allotment portion and balance get unblocked. So there is no refund involved. But why we some of the merchant bankers of the opinion to open a refund account. If tomorrow at all, unsubscribed portion has to be subscribed by the promoter or somebody else. And to the extent we cannot allot them the entire share and part has to be refunded, then there has to be a refund account. So this is just an enabling position. Right now, so far in our experience, we have not used this particular process, but we are just for information purpose. Similarly, as you know, there has to be an escrow demat account open. Now, why this escrow demat account? As you know, my first point for the physical shareholder, whatever the right entitlements are there as on record date, those will get transferred into the escrow demat account. Similarly, once your actual credit corporate action for the right share, whatever the failed cases are there, those also will get transferred into this escrow demat account. Appointment of printer point has already taken care. Apart from that, depending upon the comforts of the issuer or suggestion of the merchant banker, you can also have an independent auditor, which normally associated with the registrar for main board IPOs. You can also appoint them. Similarly, if company thinks so, and if they have issue in having this listing and trading application process themselves, they can also appoint a practical company secretary. Yeah, next slide, please. Now, during the issue, what are the things that has normally corporate has to taken care with the lead manager? As we know, as we have talked on a length, ASBA is the only mode of payment is available. There are no other payment mode of payment. During the COVID time, there was one payment mode that has been in the practice, which we used to call RWAP. That is a register interface, but that has also been stopped now. So as of now, ASBA is the only mode of payment that is available. There are two types of ASBA. Physical ASBA. Physical ASBA is nothing but you take a application, go to your ASBA bank, deposit your application there, and they block your fund and bid in the exchange platform. Online is just nothing like your net banking facility. You go to your net banking page, go to public issue or right issue option. You will have a particular screen available, and from there you can make the payment. Next one is, as we already mentioned, REs of physical shareholder and non-resident having US address, because this point was also covered earlier. Shareholder having US address, we will not able to credit RE in their demat account. It has to go to the escrow account because of the disclosure issues. Then third point is, which normally there is a confusion where fractions are involved. Now say because of your ratio of the issue, any fractions are getting created. Suppose say my issue size is 10 lakh and I can because of my ratio, I can issue only 9,97,000 shares and 3,000 shares I am not able to issue in a complete manner. So those will form part of my fractions. Now, whenever I'm applying for a RE trading, I will apply for 9,97,000 shares only, because that much only share I will able to credit in the respective shareholders demat account, and depository will give me a confirmation of that. Balance 3,000, as we know, fractions are ignored. This language is very much there in the offer document also. But your issue size for all the practical purpose will remain of 10 lakhs. So whenever I'm doing the allotment, I will do the allotment of 10 lakh shares only. Now, next one is very important as far as investor point of view is concerned, because you know REs are tradable instrument in the secondary market. As you do trading of all your normal equity share, REs are also tradable. Those who are having a trading account, they can see those REs are getting traded. So initially it was happening in very large scale, but till recently also people are not aware of that. They think once they purchase the RE, that's all. They are going to get right issue share automatically in their demat account. That is not the case. People are losing money on this particular issue. So whenever at whatever forum available, we have to educate the shareholder. There is a different kind of communication also goes from both the depositories to the respective shareholder once they purchase the REs. That once REs purchase, you have to subscribe to the issue also. So you have to make the payment. RE is for a particular price that is determined on the floor of the exchange, but whatever the issue price is there, for the right issue, you have to subscribe separately through your ASBA payment mode. Now, this is particular point for the promoters who wanted to subscribe. Generally, I have seen people keep this at the last moment, at the last day, seeing what is the response, what is the total subscription, how much they have to do. My humble request would be at least your entitlement part, which is anyhow you are to subscribe or you are in planning to subscribe, you please do it day before. And whatever the unsubscribed portion or say additional portion you wanted to apply, depending upon your comfort level or requirement, you can do it in a first off for the issue closing day. Don't keep it at the last moment, like 3:34, you see the figures in the exchange and then rush for the balance application money. Don't do that, because some of the banks, although the stock exchange allow bidding up to 5 p.m. on the issue closing day, but some of the bank do have their internal closure, which anyway start from the 3 p.m., 3:30 p.m., 4 p.m. So we should not get caught at wrong foot at this particular point. Then, as you know, promoter has to apply for an additional share. They are entitled to do that. But as you know, in the waterfall mechanism, which I will explain in the next slide for the allotment, the additional share is determined on the basis of your holding as of the record date. So if you are, for simple term, if your holding is more as of record date in one particular folio, the possibility of getting additional share on that particular folio is more than the other folio where you are holding the lesser share. Can you just scroll down a bit? Thanks. No, earlier slide, please. Thank you. Then the last point is 1 day prior to the issue closing, there is a RE suspension letter that has to be issued to NSDL CDSL. This is very important part, because on the issue closing day, your RE ISIN gets suspended, and next day morning you are supposed to get a benefit of your right entitlement. That is important as far as the further processing is concerned. So this happens a day prior to the issue closing day. Next slide, please. Then post issue, what are the things we have to take care? Immediately after the issue, the T+1, what we call, we get the final certificates from all the SCSB. There are around 60 SCSB, as I have already told. Then we do the reconciliation. Then we come up with the final figure of subscription that forms part of the 3-day report, which has to be submitted to the SEBI. This report typically signed by lead managers, registrar, and issuer. Then we run for the rejections. Now we have seen the major rejection in the right issue are those applications which are no way shareholder of the company, neither as of record date nor as a issue closing date. In the sense, they don't purchase the RE from the market, neither they are the original shareholder, they don't have REs in their demat account, but still they apply. Now what happens, how this happens, typically what we are seeing, since as I told, some of the broker allows them 3-in-1 kind of scenario in their website. So these are the investors see that this particular right issue is open without even applying their mind whether they have REs in their demat account or not, they apply. And because of that, what happens? Their fund gets blocked. And obviously, since they don't have REs in their demat account, they are not a shareholder, so we cannot allot them. But this forms the major part of the our rejections. Then everything is fine when the rejections get approved. Internally, we form the minutes. Everything is done. Then we submit the basis to the stock exchange. Typically, that happens again in T+3 and. Again, T+4 morning, we get a basis approved by the stock exchange, whichever is the designated stock exchange. Now, I'll just briefly explain how the waterfall mechanism of the right issue happens. Once you know the issue size, then the first allotment happens to the original shareholder who had applied for their entitlement part. Next is renouncee who had purchased the right entitlement REs from the market and what they had applied for that particular part, then next allotment happens to them. Next two categories are what we are talking about, the fractional shareholder. There are two types of fractional. One's shareholder who have got a zero entitlement because of the ratio. They don't have any single share, and whatever the entitlements are there, that is in fraction. So, and if they apply for an additional share, so one share I have to allot to them. The next category of the shareholder, those got some share, but part of their entitlements are in fraction, say 2.30 or 50.20, whatever these points are in the allotment, I mean, these entitlements are there. And if they apply for the additional share, then I have to allot one more confirm allotment to them, one more share. So first is a original shareholder entitlement, second renouncee entitlement, third zero fraction shareholder, fourth point fraction shareholder. Once this has happened, then it's my entitlement part gets over, and then the fifth point would be allotting share for the additional shares. Now, first preference is always given to the shareholder, original shareholder. Now, how do I determine original shareholder? Those shareholder who are there as of record date and as of the closure of the right issue, whenever I am taking a BenPos, they are still continue to be the shareholder. And apart from their entitlement, whatever their original entitlement, plus whatever entitlement they have purchased during the issue, and they are applied for something more, so that becomes part of their additional share. And in a waterfall mechanism, I have to give the preference to them. And again, their ratio for additional allotment will be depend upon their shareholding as of record date. So I have to allot in proportionate to that. Once I do the complete this particular part, then comes the final portion, renouncee applied for additional share. So after doing all this thing, if my issue size still have something left over, then I can allot to the renouncee as far as the additional shares are concerned. But again, that's proportionate to the right entitlement they are holding as of the closure of the issue. So these are the set process which is there with both the exchanges. It is mentioned in the offer document, and we go as per this particular waterfall mechanism. So coming on point number 4, now this is a very important activities on the issuer point of view. So far, everything is taken care by, I mean, most of the things taken care by lead manager, registrars, and things had come to at this particular stage. But now there are certain work that has to be done by the company secretary and their compliance team. First of all, as I told, corporate action payment and the stamp duty payment has to be made. Typically, it happens late in the evening, so your finance team has to be available. Then, depending upon the basis approved by exchange, say on T+3 or T+4 morning, you hold a allotment committee meeting, and then company team has to do the 3 major activities. First, they have to apply for a listing approval to the stock exchange. If they are listed on both the stock exchange, so their online platform, they have to apply for the listing approval. Then stock exchange will give you the no objection to do the corporate action. So in tandem, you have to keep the corporate action document ready for NSDL CDSL. As a registrar, we fill the most of the information and give it to you, and the issuer has to print out and letterhead and submit it to the stock exchange depository.
Danesh, we have to bind up fast because
I'm on the last 2 points, sir.
Yeah.
Okay.
Yeah.
Thank you. I thought my presentation would be the smallest one, but anyway. So the last particular portion, as I told you, then the trading approval happens and you have to submit the post-issue report, which is within 15 days from the finalization of the basis. With this, I have done. Thank you so much. Over to you, Manu.
Okay, Danish, thank you very much. Now, I will request Manu Thomas, because the technical part, legal part, everybody has discussed. But as a stock exchange, because you are the person who is approving this, here there's no need to go to SEBI, and you are the regulator for this particular instrument. So what are your take on and what are your points of view that will be helpful to explain? Over to you, Manu.
Right. Thank you. So as Pavanji, you had already covered that there are various avenues and the benefits of the right issue. The best part of the right issue, what I feel, is that every investors get the opportunity to participate in that in the equal proportion. Whatever is the ratio finalized, every investors get the equal opportunity. And pricing, there is no bar on the pricing. Often, almost I have seen it is always discount to the market, the price which is offered. But if you are giving it on a higher price, if the if the right issue price is higher than the market, then there may not be any subscriber. They will definitely get it from the market. So coming back to this, the various, these are the 6 occasions when a issuer has to interact with the exchange for in a right issue. First is for the in-principle approval, fixation of the record date, which is very important for the right issue, and then the opening of the issue based of allotment approval, then listing and trading approval. So can we move to the next slide, please? So I will run through each one in short. Most of the things has been already covered by Anjali and team. As you had mentioned that there are 4 types of right issues. One is for the fast track issue, and one is for less than 50 crores where ICDR is not applicable, and then the more than 50 crores. One more aspect is that right issues is also one of the factor which issuer use for meeting the MPS requirements. For complying with the MPS where the promoter's holding is more than 75%, they have to bring down to 75%. In such cases, rights is also one of an option which they, but in such type of right issues, the offer is made only to the public. Promoters won't be participating in that issue. Coming back to the eligibility, which has been already covered. So these the promoters and directors are debarred from the capital market, or if a promoter or a director is a director in another company which is debarred from accessing capital market, such issuers cannot come out with an right issue. And even if a promoter or a director is a fugitive economic offender, also there should not be any partly paid up shares in the company. So the next slide, please. Willful defaulters. If the promoter or director is a willful defaulter in the right issue, they cannot renounce their rights. However, they can do it within the promoter group. And every offer document, the draft letter of offer, which is filed with the exchange or the board, has to be there in the public domain for comments, public comments. Minimum 21 days it should be there. And investors, whoever, can go through this thing. If they have any objection, if they have access to any information which is not covered in the document, they can mail it to the email IDs which is mentioned there. And the issuer who is coming out with the right issue, if there is any convertible securities in the company, they have to make provisions for such convertible securities. There should be a reservation of equity shares in the right issue. So whenever they will exercise that portion of the securities, they will be entitlement for the rights, and they need not have to go through this process of public issue and allotment. Straight away, under the same terms and condition which the shares were allotted to the other shares, they are also entitlement for the rights. Monitoring agency, as covered, more than 100 crores right issues, monitoring agency is applicable. And as we had, Anjali has already mentioned that from the date of filing of the offer document and till the payment of the final, till the execution of this right issue and payback of all the monies and allotment of securities, a issuer cannot come out with any type of further issuances like FPO right, any other right, preferential issue, QIP, even bonus, except the ESOPs, which has been already granted and they are coming out for listing. So during this period, no further raising of capital. And the validity of the in principle, once we grant the in principle approval, that is valid for the next 1 year from the date of allotment. So company can come out with the right issue for in the next 1 year from the grant of this approval. And whenever the company finalize for the right issue, they intimate the exchange for fixation of the record date. So record date has to be intimated at least 3 clear working days to the exchange. When we calculate 3 clear working days, the date of intimation and the date of record date will not be considered. So other than that, there should be clear working days prior intimation of record date to the exchange. And exchange, this record date is considered by the exchange only after the grant of in principle approval. We have encountered cases where company sometimes make the announcement of this thing and come for the record date without a receipt of the in principle approval. So exchange doesn't consider this record date. Only after the grant of in principle approval, record date is considered. And on the record date, the company has to give the issue price as well as the ratio on which the right will be, entitlement will be granted. Say 1:, whatever is the ratio, they have to make this announcement of the issue price of the right issue and the ratio clear. Based on this, the X right price is determined. Now in the T+1 scenario, the record date itself will, the script will get X right from the date of record date. Earlier in the T+2 scenario, this used to get a day prior from the script become X right from the day prior to the record date. And there is, after the record date, there is no upper limit on which a company has to open the issue. It can be any time from after the record date. But for fast track issues, there are a limitation that it has to finalize within 1 year from the record date. However, the trend is that no company go for a longer gestation period because price is already fixed on the record date. And if a issue is opening after a long period, there can be fluctuation in the market, price in the market. And because of that, the issue may not be good if the price has come drastically down in the market. So there are chances of failure of the right issues. And right, issuer, once a record date is kept, thereafter the issuer cannot withdraw the right issue. In case if issuer withdraws the right issue, then for the next 1 year, they cannot come out with any listing of securities. So once the record date is finalized, then they come open the right issue. And before 3 days of opening of the right issues, issuer has to give the abridged prospectus, abridged letter of offer, and the applications to all the investors. The mode can be anything in electronic form or physical forms, but the investor should get the applications at least before 3 days before opening of the issue. And if any investor doesn't get any application, then also he can apply on a plain paper. And as we have already discussed, the mode of application can be only through ASBA. And right issue period starts from between 7 to minimum 7 days to maximum 30 days. And there can be even after, if anybody has announced anything below 30 days, they can further go for an extension, but maximum up to 30 days. Credit of REs. All the shareholders will get the credit of right renunciation, right entitlements in their demat account. And so that much REs, whatever number of REs is credited, mostly in most of the case, 1 RE is equal to 1 share. So that is the entitlement every shareholders will get. And this credit is done before the opening of the issue. However, and one can also, if they are not interested to subscribe in the right issue, they can even trade, they can sell their REs to anybody on the platform of the exchange. now for the since 2020, these REs are also traded on the platform of the exchange. And there may be a misconception that somebody many times it has noted that REs were trading under exorbitantly high price, and RE is just an option to subscribe and your entitlement for that shares. However, when you are applying for after receipt of purchasing the REs from the market, if you are applying for the right issue, again you have to pay the right issue price. So while purchasing the RE, one should be taking both the aspect into consideration. And as I told you that 3 days before itself, the RE window will be closed, and whoever is the designated exchange, the issuer has to keep 1% deposit with the designated exchange. And minimum subscription, as we have already discussed that now this is done away with 90% minimum subscription. However, there is a condition that if the issue is for any capex, capital expenditure, or if the promoters are not subscribing to their entitlement call the full money in for the application, or you can ask for partly paid up shares. But you have to select between either or. Either you can call for the full money or partly paid up. You cannot exercise both the options. We have also received cases sometimes where the issuer has filed with both the options. So as per the regulation, any one you have to opt. And in the application, minimum 25% application money will be called. Further, while making the projections in the objects of the issue, most of the cases, the objects are of the issue is for working capital requirement. In such cases, one should be, if you are going for partly paid up shares, so many do the mistake of making the projection requirement of fund just on the application money what they are receiving. So the projections, the entire money has to be taken into consideration. That is, even though you are going for a partly paid up shares, after considering the full 100% amount, whatever is the amount you are getting in the issue, for that, the objects of the issue should be prepared. Can we move to the next slide? Yeah, for basis of allotment, if the issue is not successful, the entire money has to be refunded. Mostly the unsuccessful is because of the subscription. If subscription is applicable in an issue and if they have not received the subscription, then they have to refund the entire money within the 4 days of the closure of the right issue. Otherwise, they have to pay 15% interest rate from the date of closure till the payment is made. And this waterfall mechanism, where normally the base of allotment is done by the, if there are more than one exchanges, it is done by the designated exchange as decided by the company. And the water flow mechanism, Dhyanesh has already discussed. So first, the allotment is made to the right entitlement of shareholders. Whatever is the shareholders' entitlement, and if they had applied for it, they will be given first allotment. And thereafter, the shares which has been renounced, their entitlement will also be there. There will be many who has not subscribed. So even if in case of fractional shares, like the entitlement is 2:3, where it is clear 1:1, there won't be any fractional entitlement. So normally the fractional entitlements are not given in demat mode. It is the whole integer is credited. For whoever is having the fractional entitlement, after giving to this entitlement part, as we had discussed in the first and second point, the fractional entitlement holders will be given 1 shares to cover up their fractional portion. And thereafter, if any shares is remaining to be allotted, then those shares are given first to the additional shares applied to the shareholders who are there on the record date of the company. And here, one thing we have to note is that the additional allotment will be based on their holding in the company, unlike in a public issue where it is depending upon the size of the application what you make. The larger the application you make, you will be given in a proportionate basis in a public issue. Unlike that, here the allotment of additional shares will be given in the ratio of the shareholders holding in that company on the record date. Thereafter, even after giving all the shares to this additional shareholder, even then it is not filled up, then further it will be given to the additional applied by the renouncers. In that case, after that also, if there is any balance, it can be given at the discretion of the board. And if there is any underwriter, that shares can be taken by the underwriter. And once this allotment is done, the company come for the listing and trading approval. Next slide, please. Where after the allotment, the board approves the board of the company approves the allotment, and the allotment is done as per the basis approved by the exchange. The allotment of securities is done in dematerialized mode only. There was no physical shares, and unblocking of the remaining application money. Once based on that, the listing approval is granted, and there are various other documentations. And once those things are completed, then the company credit the shares with the depository, and based on the credit confirmation, the final trading approval is granted. Mostly the time taken between the listing and trading approval is 1 to 2 days. I think that's all from exchange. We are open to any queries on this.
Okay, thank you, Manu, because
Thank you.
you have given the crux point where you are facing issues relating to the issue size or when the company is coming. So we'll cover up because various questions we are receiving. So we will discuss this in the question answer session. Now
Sure.
I'll request Prashant Khatri, because he has also brought out his right issue, or he is working in corporate. So what is his take on this particular concept? Over to you, Prashant.
Thank you so much, sir, giving this opportunity to me. Just to share my thoughts on rights issue, what we faced in our organization. I think as a company secretary, the key is to have a coordination between all the agencies involved in coming up with the rights issue. So you should have a proper team there who takes who basically in which you have a trust, who can take this rights issue to a success, and there should be proper coordination between the lawyers and the merchant bankers, which I felt personally, because they're the person who basically get your letter of offer drafted and timely submitted to the stock exchange for their approvals. And being you as a compliance officer, you need to give the approvals for getting to the next level. So that is one aspect as far as this drafting or letter of offer is concerned. The problem which we faced actually in our rights issue is in regard to the I would say in regard to the this RE trading, the rights entitlement trading. As I understand, basically it's the early days for the investors to understand, to differentiate between the trading in equity shares and the trading in rights entitlement. So most of the cases, most of the complaints actually which we received in our rights issue was, let's say, the people were saying, let's say we have purchased this rights entitlement, now give us the rights. So we just mentioned, and we were helpless to answer them. Basically, but you need to apply first, right? For getting your rights shares. But what they did was basically they just instead of trading into shares, they have traded into rights entitlement, and as Mr. Thomas rightly said, the rights entitlement was basically trading to much higher price than to the as compared to the price of the share actually. To my actually and my suggestion, I think on from this platform to the stock exchange, maybe to SEBI also, that that there should be a cap on let's say there should be upper or lower cap in the RE trading also, so that person should not get affected. Let's say later on when they end up paying more than the price for rights entitlement, and then again need to apply for the for their entitlement to the company, right? And end up ending paying double the price, right? So this is the main problem which we face, right? And it will again affect you when you are taking the refund from the SEBI for as a 1% deposit, because at that time then you may need to see that there should not be any complaint pending. And what we face that lots of complaints basically were received by the RTA to the company regard to this matter. So this is one aspect. Another thing which is very, very important, I think what we don't give importance to that, because we are very cautious in preparing our letter of offers, or let's say getting other regulatory approvals, getting the corporate action done, everything. But we forgot at the last moment that we should see that all the demat accounts, right, of our promoter group companies should be activated, right? It should not be done, let's say, in case you now let's say your promoter says, let's say I need to let's say subscribe this rights issue in a particular company, right? And then you need to renounce those rights into demat account of that company, and that company demat account is not activated, right? So that needs to be taken care of, because otherwise you will be on the wrong footing at the right time. Lastly, I would say, as far as fractional shares are concerned, then you need to be prompt enough to see that you sell these fractional shares as soon as they get allotted, and the amount which you get after disposing of these shares, you need to be transferred to the shareholders. In our case, what we did was we waited for the right time at the right price, so that we'll pass on the benefit to the shareholders. But I think most of the shareholders felt that it basically intentionally company don't want to give the refund in time. So my advice would be, let's say, as soon as you get the allotment, you just get this fractional shares disposed and transfer the amount to the respective shareholders. So these are my actually small points, I think, what we felt in our rights issue. I think this is I've kept it very short and crispy in that way, sir. Thank you.
Thank you very much, Prashant. Your experience of right issue and suggestions is very nice, and people will understand where you are and what you want to communicate. Thank you very much. Now it's time to question answer, because we have received various questions. So time is short, so I have to be fast. So what I'll start, certain questions I will address to the particular person. If anybody wants to add certain additional point, please just tell me. So you then you can add that point. So Anjali, whether the CCDs or NCD can be issued on right basis? If yes, in which proportion if the company has outstanding equity, preference CCD and NCD as well?
CCDs can be issued, but NCDs cannot be, because we are not increasing the capital by virtue of issuance of NCDs.
Okay.
Optionally convertible is allowed, but not NCDs.
But a company has the outstanding equity. That is the question. In which proportion?
Proportion will really depend on case-to-case basis. As I said, on the basis of the adequacy existing capital, there are various provisions which are needed to be looked into. Then only proportion can be decided.
Manu or Dhyan, you want to add any point on this?
So regulatory wise, there is no restriction on the proportion. So it's purely the issuer's choice.
Niti, whether ESOP will be covered under preferential issue?
So there is a separate regulations for ESOP and it will not be covered under preferential issue. And section 42 for private placement specifically exclude ESOPs under that.
Okay. How's the equity and a easy exit option? This is somebody asking why PROI cannot invest in shares warrant. Moini, I think Niti, you can tell.
Yes, sir, as per rule 7 of MR rules, there is specific prohibition under which person resident outside India cannot participate in rights issue of warrants. Although person resident outside India can subscribe to warrants on preferential basis or any other route, but for rights issue, there is complete prohibition as per RBI.
He's asking share warrant.
Yeah.
Why?
So that is what Niti
PROI
told,
cannot
that as per the
invest in
FEMA
share
rules,
warrants?
there is a prohibition. SEBI is silent,
Anjali,
SEBI norms are silent, but FEMA rules mandate restrict it.
Okay. Whether company may issue compulsory convertible preference shares with voting right?
No. They
Why?
cannot be voting rights. There cannot be voting rights in the preference shares till the time they are converted into equity.
Dhanesh, Manu, you have any additional point in this?
No, that's right.
Okay. Recently, one equity share with current market price is 3,000 came out with the 2 shares of right issue at 10 rupee for every 1 share held. What may be the reason for such kind of offering?
Rewarding
Again,
to shareholders, maybe, sir.
Company's perspective and rewarding to the shareholders, yes.
So, Manu, is there any restriction because you can give bonus or another way is that this type of right issue? Okay, so 3,000 rupees shares at 10 rupees, which is
There is no such restriction on the pricing. It can be anything but above the face value. So I think in that case, the face value was ₹10 and they had issued that is more almost similar like bonus, unlike a bonus issue where everybody will be allotted shares. But for this sort of right issue, whoever will be applying, they will be only getting. So one investor should be aware that this sort of a discounted right issue is coming and they should apply for it. And there is no restriction.
Yeah. And the main condition is you have to offer to all the existing shareholders.
Exactly.
Yeah. Okay. So anybody who's asking this, he has asked this question. You can bring out at any rate, not below the base face value, but you have to offer equally to everybody who is your existing shareholders. Okay. What if promoter renounce the promoters group? Do they still get SAST exemption?
If the renunciation is within the promoter group, exemption is available.
Okay. For fast track eligibility for delivery based condition, are volumes in both stock exchange considered or only one stock exchange?
The answer is only at one stock exchange, whereas the shares of the company where the shares are more traded, because a shareholder will trade only at one stock exchange. So stock exchange where there is higher trading volume, we will consider that stock exchange.
Manu, any condition relating to the main stock exchange concept, like which is your main or volume based?
No, it is purely based on the volume. Whichever exchange is having the larger volume for that particular script, you can that exchange volume can be considered.
Okay,
so, but it will be considered only for the one exchange.
Okay, if the volume is the same,
anyone.
Okay, then anyone. Okay, what is the please brief about forfeiture of shares under right issue for partly paid up shares. Anjali.
So in case of partly paid up shares, as and when the company asks for the calls, the existing shareholders will have to make the payment. If somebody doesn't pay, the company will issue a final notice to the shareholders that you pay by this date, otherwise the shares will be forfeited. This is what the procedure is. The Companies Act provisions are there governing the forfeiture. But generally, companies give one or two additional timelines to the shareholders before forfeiting.
Okay.
Yeah.
Okay. And the insider trading and contra restriction apply on right issue, right entitlement?
Right
No,
entitlement
sir.
not applicable.
There is specific SEBI circular issued in July 2020, which specifically keeps rights entitlement out of the domain of trading window.
Okay. If a company has outstanding warrant and it comes out with the right issue, is the company required to issue warrants on right basis? And if yes, what will be the conversion period for such right warrants?
No, it's not mandatory that if you have outstanding warrants, you will have to allot warrants in the rights issue. The choice of security is totally upon the company. It can be either equity or warrants, whatever they want.
Prashant and Dhyanesh, you have any additional point on the questions? You please speak.
Sure. Yeah.
Okay.
Sure.
Okay. Can only convertible warrant be issued on right basis or all the existing shareholder without issue of normal equity shares?
I didn't get the query.
Can only convertible warrant be issued on right basis to all the existing shareholder without issue of normal equity shares?
It has to be a detachable warrant, wherein equity plus warrant has to be there. Only warrant cannot be there.
So there's a equity and there is a detachable warrant. So I have to take both the things.
Right.
Right.
Okay. In case of CCD, are foreign shareholder eligible for receiving dividend on these shares?
Sir, on CCDs, there is no dividend. There is interest coupon rate payable, and company can even come out with zero coupon convertible bonds, debentures.
But the question is, in case of CCD, are foreign shareholder eligible for receiving dividend on these shares? So, okay, you are saying there's no.
Sir,
Yeah.
On market renunciation to be closed before 3 working days prior to the issue closing date, whether off-market renunciation continue till the issue closing date or it has to be closed on 3 working days prior to issue closing date. I think.
Yeah,
Dhyanesh,
I'll take that.
Dhyanesh.
No, it can be done till the issue closing date. Off-market trade can be done till the issue closing date. There is no restriction on that. Till your ISIN gets suspended, you can keep on transferring the right entitlement.
Okay. I think somebody's asked what is the option for shareholder who are adamant to continue to hold in physical form and not to get the shares in demat, though it is not connected to this, but now you can have Manu, any issue with this?
Unfortunately, here in physical shareholders, they have to give the demat account for credit of demat, the REs in their account. REs is not issued in physical form. It is in demat mode only. And against the RE only the allotment will be done. So physical shareholder doesn't have an option here.
Okay.
The answer to this question is no. There is no option.
Okay. Why lender permission is required for right issue when the company is receiving the money as capital?
In many of the lender agreements, there is a clause for any change in capital structure of the company. So from that perspective, it is required. And also, if the object of the company is to acquire a land, there may be a possibility the lender may say that please pay us first, then you acquire that land. So from that perspective, the lender's permission becomes important.
Okay. Dhyanesh and Manu, can the right issue ratio be in decimals?
No.
No.
Okay. Can fractional entitlement be considered for right issue?
Yes, at the time of allocation, fractional entitlement holders are given first priority before going to additional allotment.
Okay.
It's part of the capital only.
Okay. Anjali, please elaborate on the open offer trigger. on the right issue?
So in case of a rights, as in case of a rights issue, takeover exemption is available only when the rights issue price is lower than the X rights price. As I told in the presentation as well, there is a formula to calculate X rights price, which is given in the takeover regulations. So accordingly, if the X rights price say comes out 100 rupee, and the company is coming out with the rights issue at 75 rupee, takeover exemption will be available. That too only with respect to the creeping acquisition of 5%. If you're breaching the threshold of 25%, either individually or collectively, the takeover exemption will not be available. So accordingly, but however, I told that there is a SEBI exemption which has been granted recently. If somebody feels that there is a genuine reason that why the promoter holding may cross 25% threshold, they may apply to SEBI.
Okay. Proportionate means right is basically 1:2 or 2:3, etc. So right issue of CCD will be based on equity basis of CCD basis.
Equity
It
basis.
will be on the basis of equity, yes.
Equity.
Okay. Do we have precedents of the SAST exemption when renunciation is done within promoter group?
That we'll have to search, but I'm sure there would be cases.
Manu or Prashant or Dhanesh, any things you remember? Do you have SAST exemption when
No, I
renunciation is
don't.
done?
Whatever the
No.
transactions were handled, I don't explicitly remember any particular exemption has been taken.
So I
But
think
the-
in one
Yeah.
of my previous, it's long back actually in Fortis, so there was a exemption which we availed as per the SAST. That time actually the promoter's idea was to infuse their funds only, right? They want to discourage general public to invest in their rights issue way back in 2008-9, right? I'm just talking on those time.
Okay.
So that time the price which they kept is basically near to the market value. Now it's basically the X, it should not be more than the X market X right prices. So that time we availed this exemption, wherein they have subscribed the rights entitlement of other shareholders because they were not interested in applying to that rights issue because that was not attractive enough to be subscribed by the general public.
Okay.
So, sir, even in one of our cases, we took this exemption wherein one of the promoters had passed away, and obviously he could not have subscribed to his shares. And for a fast track issue, one of the conditions is all the promoters should subscribe to their entitlement. So we went to SEBI, took this exemption, and his shares were subscribed by the other promoters. The person who had passed away, his shares were subscribed by other promoters.
Okay. While there is not a formula for pricing because it's a free pricing, even then, if the company wants to discuss, is there any basis of determination of pricing?
Sir, it depends on the running market price of the company. When we talk about preferential issue pricing, 90 trading days, 10 trading days, there can be some discounting to that price. Or even the NAV of the company can be one of the factors to decide upon the issue price.
But ultimately, the
Along-
crux is it is free pricing. You can fix
Yeah, it
Yes,
is
sir.
free pricing. Yes.
So we have seen the 3,000 rupees share. They came out with 10 rupees. Okay. Okay. So why does the private limited company is coming out with right issue? It require valuation from registered valuer.
No, sir, no valuation is required for rights issue.
Okay. So I think we have covered all the questions which have received today and things. But anything else, Manu and Dhanesh and Prashant or Anjali or Niti, you want to cover which is missed out or which you want to communicate to everybody? Manu, first you. Anything you want to communicate?
Most of the issues where, as we see these days, which is coming out with working capital requirements. So as per the regulation, one has to give the projections for working capital. And most of the case, we have noted that there's a very great spurt of trade receivables when they show the projections and all, which actually is not supported by the turnover of the company. or the projection of the turnover. So justification for those sort of whatever the objects for which the fund is raised, that should be genuine, and otherwise it may get stuck for the in-principle approvals.
Manu, I can bring out in kind also. Suppose I have a loan in my books, and then I bring out right issue. Can I bring it?
Loan you have taken from the bank, or is the promoter's
From suppose I have taken loan from the promoter or some unsecured loan from other party, and I am bringing loan, and he's a shareholder.
Definitely. You have to disclose it in the offer document, and you also have to disclose from where this fund has been, what were the terms and conditions of the loan which was taken, and where this was deployed in the company. So those disclosures you have to mention in the offer document clearly, and based on the CS certification that this fund is there in the company. Based on that, you can definitely have it.
Okay. So, Dhyanesh, you have any point?
Yeah, one point I have just missed out. I just wanted to emphasize upon. If any promoters want to apply for additional share, we have to make it sure that promoter from that particular DPID client entity has not renounced any shares. So, in case if it's renounced, then whatever the additional share applied, we will have to reject it. So, in other words, if any promoter want to apply for additional share, he cannot renounce his entitlement.
Okay. Dhyanesh, can you just, if any right issue shares are offered at discount, then it will be capital gain to individual who is investing in a right issue. Will income tax issue notice to such capital gain?
I have not, to be very frank with you, come up with any kind of this transaction. Manu, are you aware?
No, I'm clueless on this. Yeah.
Anjali, what do you say?
As per the provisions of Section 56 of the Companies Act, since rights issue is an offer to everybody on proportionate basis, so there are legal cases where in capital gain tax, it is not capital gain tax, it is in any case gift tax, which he might be wanting to talk about. So gift tax is exempted on a case-to-case basis, and there are legal cases to that.
So Section 56 of income tax you are referring.
Yeah.
So income tax, if you are offering to all the shareholders equally, then this is not applicable. This capital gain tax issue will not come. Okay. Will the recording of this session is available? Yes, it is available. Whether in private placement valuation report from merchant banker, accountant, and registered valuer is mandatory, or only registered valuer certificate is enough?
Registered value, sir.
Okay.
In case of a listed company, registered value.
Okay. Prashant, do you have any point which is missed out?
So I think everything is covered.
Okay.
So I don't have anything to offer.
So,
thank you.
so I think we have come to the end. We have completed the session with all the question and answer which we have received, and very nice presentation given by all our participants, all our panelists, and each and everything we have covered. Now, as a ritual, when we are closing, we are asking that what is the improvement, what are the things in this particular segment should take place, specifically right issue. So Prashant, I will start with you, your 1 minute time, and then I'll go to other panelists.
Prashant, unmute yourself.
You have to unmute yourself.
Yeah. Sorry. So I'm just saying this with this newly this trading in rights entitlement. I think we need to make, let's say, our investors aware about the fact that, and I've personally see that people have lost lakhs of rupees in this rights entitlement, trading in rights entitlement, because they are not aware of whether they need to apply to the shares, apply to the company, let's say, for the rights issue or not. So I think this is the major thing which we can work upon and make the investor aware about the trading in rights entitlement. That is my, I would say, advice we can work upon in the rights issue.
Okay, Dhyanesh, you.
Yeah, actually, I also had the same point in the mind, which Mr. Khatri has covered, because there has been a lot of losses for the common investor because of their not being aware of the process. That is point number one. Point number two is, I mean, this was briefly discussed off the record with other parties also, whether we can have a, like in a IPO, we have a specific timeline for each of the activities, whether something similar can be worked upon on the right issue, because right now ASBA is the only mode of payment is available. So thing can be more clear, and I mean, everybody, even investor is aware when actually allotment will happen and when the refunds are going to be there. Because since it is open, so anywhere, depending upon the company's comfort or requirement, issue get close. I mean, the listing will happens in 4 to 5 days or 6 to 7 days, sometime 8 to 9 days also. So if we can have a say timeline, then it would be more helpful and more transparent.
Niti,
Yes, sir. Sir, with regard to various instruments, it will be much better if more clarity is provided in the law with regard to issuance of complex instrument, hybrid instrument. We being the merchant bankers, we have to do in the rights issue of warrants, which we have handled. We have to do a lot of brainstorming. There were bit ambiguities as well, which I think the lawmakers should address and should weed out.
Anjali.
I'll vouch to what Prashant said and Dhyanish said with regard to RE trading, and as a suggestion or to the exchanges, on the homepage of the entitlement trading, there should be in bold terms, it should be mentioned that this is just RE trading. You will not be getting the shares, and simultaneously, because for the person who's buying the RE, for him, the cost of acquisition is increased. Apart from the rights issue price, he's paying extra in the for the RE trading also. So as a layman, the person doesn't understand. He needs to be educated in this aspect. Then secondly, as a merchant banker, sometimes companies try to cut short on the due diligence part, wherein they feel that the information is not available or we don't want to disclose. The companies have to appreciate that if they are raising money from the public, they will have to give a disclosure. And whatever is not available, according risk factor would be added in the offer document.
Okay. So final word from Manu from your side, and specifically the right entitlement issue is always confusing, and
Yes.
so many people are confused in this. And your advice to industry at large.
Basically, on the as we know that for right issues, it is for everybody, all the shareholders. But unlike in other type of private placements, here shareholders approval is not required. So only before the opening of the issue, 3 days prior to the issue, the shareholders are informed that they are getting this entitlement. And I don't know how much they are aware of, like the most high discounted REs, right issues which has come, like 3,000 rupees, which was offered at 10 rupees just as the face value. I don't know how many, or whether all the investors were aware of such a right issue, whether they are getting that at a discount this thing. Ultimately, if the shareholders don't apply against their entitlement, this will go to the one who is having a larger, if you see in the allocation part, this will go to the holder who has applied having a larger holding in the company. So awareness of REs as mentioned by other panelists here. So that is an area where we have to
Okay.
look into.
Okay. So thank you, Manu. Thank you, Danish. Thank you, Prashant, Anjali, and Niti. You have given all answers. Few questions are still coming. So we will send them directly. And anybody who has asked question, it is not clear that his answer is, our answer is, he wants to ask further more questions. They can write to us, we will reply. So thank you very much, friend.
Thank you
For participating. So